It's great to have you here on the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. You know, I've talked in the past about how Amazon can price items differently based on your shopping patterns, but it turns out they are not alone at all anymore. I'm going to tell you what you need to know about the loyalty tax. And later, there's a trend in weddings, wow, that is your future's friend. People are consciously having more affordable weddings. Yep, it can be done. So you're really, if you suspect that you're really being targeted by a retailer or an airline or whatever for potentially higher prices, apparently there's more and more data to support that is going on. Now remember, years ago, there were all the rumors and also news reports that you were being price discriminated against if you were doing business with a company on a MacBook. And the idea was that MacBook customers were not as price sensitive as Windows computer users. And so retailers, at least the allegations were, that retailers were charging more to people coming from a MacBook. And it was never clear if that was an urban legend or if that was actually going on. And so now we've moved to a new era with AI. There's now a federal investigation because there have been whistleblowers saying that certain banks, credit card companies, and certain data houses are providing companies with drilled down to you personal data. And they use that data to charge individual discriminatory prices. And so the whole idea of this database stuff that supposedly is happening, again, this is early innings, and it's only a federal investigation based on whistleblowers. But if the allegations are true, what's happening is companies are developing or buying the data on your individual shopping patterns, and then they are charging you a higher price or a lower price, whether you are a hard-to-get customer or what I call a convenience shopper, that you just go to that website and you're going to buy from them, that you're going to pay more. There have been allegations that Starbucks is now doing to the individual discriminatory pricing. By the way, Starbucks, if you did not hear, has had declining sales of late, and they just replaced their CEO with the person who used to run Chipotle, which is a Wall Street darling. So who knows what actually will be going on at Starbucks going forward, even if these allegations that they're doing individually targeted prices are accurate. But I've talked about in the past that there's just so much incentive for businesses with the amount of data that's available today to come up with individual pricing that charges more to people who are super loyalists and charges less to people who are not super loyalists or very price conscious. And I use, as I've talked about in the past, I use a lot of shopping apps and a lot of restaurant apps. And I use them because I get so many discounts that are sent to me. And some places it's quicker. In my TV work, I did a story recently about how high-volume Chick-fil-A's now have discriminatory lines. If you have their app, you're able to go in a shorter line to get your food than mere mortals who don't have the Chick-fil-A app. So there's going to be more and more stuff that is actually focused on you as an individual. And what it requires, if you suspect that, let's say, a retailer might be charging you more than they're charging somebody else, what you got to do is, if you sign into your account with them, you shop, there's an item you're interested in, but you're like, hey, is there a better deal out there? You go on your phone or your computer into what some sites call incognito mode, others call private browsing, whatever it's called. And you don't sign into your account. You shop the same website, the same item, and then you'll be able to have a good feel on whether or not you're getting a higher price or a lower price as a known person to that company versus otherwise. But what's really creepy about the allegations that the feds are investigating is whether there's a particular large bank, another credit card portfolio, whether they are taking your personal data, packaging it, and selling off an analysis of you as a shopper to various retailers, restaurants, airlines, that sort of thing. That is creepy beyond measure. You know, if a restaurant or a retailer is tracking you with your own loyalty account and they're figuring out, oh, this person doesn't care what anything costs, let's charge them more. Or this person's only going to buy if they're offered a better deal, let's charge them less. That I'm not as tweaked about as, let's say, a major credit card company or a bank or a data analysis company putting together a portfolio, a profile of you as an individual, and then selling that information off to others. Woo! I don't like that at all. Remember when we used to have all those questions about whether MacBooks were, if you shopped on a MacBook, you were getting higher prices?
Oh, yeah. Mm-hmm. Yep, it's true. In so many places, depending on, I mean, I've noticed it at stores that I'm shocked at, that I didn't realize. Just for having a loyalty membership, I'm getting punished.
So you're doing the incognito and then the other?
Oh, yeah. I just use a totally different browser that I don't have anything saved on. That's
and
what
you're
I do.
saying you're being
I
charged more as a loyalist?
I see it.
Routinely?
No, but I would say 20% of the time, which is enough to make me mad.
Yeah.
So.
Got it.
Okay.
You heard it right here. You heard it from Christa. You got a 1 in 5 chance they're going to rip you off for being a loyalist.
I mean, sometimes it saves me money because I get special discounts, but yeah, that's not fun. Okay, we'll go to some questions. Terry in Montana says, take a deep breath. We were sold a variable universal life policy years ago. How do we get out of it, or should we? We do not need life insurance anymore. We were sold this policy by our financial planner when we had kids at home, and the idea was to, quote unquote, borrow against it to fund our kids' college. Our kids are finished with college and out of the house.
I'm taking some deep breaths here so that I don't go crazy on you here. I despise universal life. VUL, if you're not aware, is variable universal life. These universal life policies are a terrible thing. They're worse than bad, and have blown up on people so extremely, so catastrophically, that you can end up losing money and ending up with a monster tax bill. And they're pitched as a tax-smart or tax-free investment. Do you know what you're investing in if you buy a universal life policy? You're investing in the financial future of that salesperson who holds himself or herself out as a planner, but all they are is they're a high commission salesperson ripping you off. Okay, I'm breathing deeply again because I don't want to get even more
Terry
angry.
knows, yes.
So what do you do now?
Yes.
Oh, before I go on, second thing, Anybody who pitches you life insurance as a way to pay for a kid's college is cheating you, because we have these magnificent, most of them, magnificent 529 plans that aren't potentially tax advantaged. They are tax free. If you buy them Clark Smart, you buy commission-free 529 plans. And if you buy from my Dean's List with high honors, you're buying plans that have microscopic management expenses for you to save for a kid's college. Anybody ever pitches you life insurance as a way to save for a kid's college, I want this implanted in your brain. They are lying to you. They are cheating you. Okay. Now, you have this piece of garbage, variable universal life, but now that you're in it and you've been in it a long time, it's a lot easier to get in trouble than to get out. So what I want you to do is there's a wonderful service called evaluatelifeinsurance.org that is a nonprofit affiliated with the Consumer Federation of America. And the Evaluate Life Insurance service, again, evaluatelifeinsurance.org, they're going to charge you a fee. It's relatively small, $150, to evaluate this garbage policy and tell you, what do you do with the garbage? Do you just throw it out? Do you convert it into something? Do you cash it out? Or do you hold your nose because you've been in so long and you hold that policy going forward? Shallow breathing again. Go to evaluatelifeinsurance.org and Terry, pay the $150. There's paperwork they're going to want from the rip-off insurer. You're going to have to get it from them, hopefully from their website. You'll be able to sign into an account and get it. They don't like to give this information, even though it's legally required, because they know it means you're going to make a move with the policy. If you have to, you complain to your state insurance department in your home state of Montana if the insurer stonewalls you on giving you the paperwork you need to have the evaluation done. Get the evaluation done. You'll get a report that tells you clearly what's the best thing to do with this variable universal life policy. I want this to stay with you. Anybody pitching you any form of universal life insurance, I'm not aware of a single policy ever sold that was a good idea for anyone except the salesperson and the insurer they're working for, not for you as a consumer.
Spoiler alert, there is someone who wrote into Clark Stinks. I don't know if I'll get to it tomorrow, but in the next 2 weeks, I'm definitely going to get to it, who says it worked for them. So we'll see. Wendy in California says, my husband, 55, and I, 50, file our taxes married separately for student loan repayment purposes. This year, my husband is earning very little and will be in a lower tax bracket. He has a couple of $100,000 in IRAs that are rollovers from old 401k plans. We are thinking, since he's in a low tax bracket this year, that we should take advantage of rolling some of his over to a Roth. We do have the funds to pay the taxes. How do we decide how much to roll over, and at age 55, is it worth converting? Retirement is at least 6 to 10 years away, and he is likely to work at least part-time after retiring. Do RMDs apply to rollover IRAs?
No, RMDs do not apply done far enough ahead. There's no issue. And there's no RMDs required starting, is it now or next year, on Roth 401ks that used to have them. So the Roth version keeps getting more and more advantages that make it so superior to a traditional 401k and a traditional IRA. So one thing you said that could be an alarm here is if you're married filing separately to make things more favorable in the student loans, if you convert the money in these old 401ks that are in IRAs now into a Roth IRA, it's going to generate tax, as you know, but it also may change the formula of what's required to pay on the student loans, because the big bump in income that will occur in the year of conversion. It is a great advantage to do what you said. With the decline in income, it's turning lemons into lemonade, but it would turn the lemonade back into lemons if it leads to more unfavorable calculation on the student loans. As long as the student loan thing is okay, there's great advantage in your mid-50s to convert traditional into Roth because it gives you so much more flexibility later in life, and you already dealt with the uncertainty with being in a much lower tax bracket of potentially today being in a higher tax bracket than you'd be in retirement. You eliminated that concern, so the Roth wins all the way around, except that potential gotcha on the student loans.
Jerry in California says, I was looking for a flight on Google Flights, and it's now listing Southwest along with other airlines. I thought Southwest would not share their schedule with Google.
Yeah, and they're on Kayak now, and who knows, well, they're on corporate systems now. Southwest is the largest airline in the United States for domestic travel. And what's happened with Southwest is their direct rivals, which are American, United, and Delta, have these fortress hub operations. And they have these markets where they're just completely dominant. And so they're able to charge much higher fares in those markets. Southwest is all over the place, but dominant in very few major markets. So they're not front of mind a lot of times with people. And up to this point for their entire history, you could only book Southwest at southwest.com, and that was their thing. They wanted people to be hyper loyalists. They're having trouble, as large as they are and as spread around the country as they are, getting people that are not hyper loyalists even think, oh, Southwest flies there. So they're changing their stripes, just like they are with the seat assignments. There are a lot of things changing with them. A lot of the quirky stuff that made Southwest so unique in the air travel market in the United States, they're moving away from. And we'll see how all this plays out for them. But that's why it works that way. So speaking of tickets, how about being sold a ticket to be a guest at someone's wedding you're invited to? Yep, can you believe somebody was getting married and was charging guests over $300 to attend the wedding per ticket to the wedding? It really did happen, and it wasn't sold on Google. I'll fill you in. This was a News of the Weird story in the New York Post, which does a great job with stories that are news of the weird to attract eyeballs. And this is one where a couple wanted to get married. I think it was St. Patrick's Cathedral. And there was a lot of cost involved with the wedding they wanted to put on. So they invited people to the wedding, but they told them, hey, it's $300 a person to come to the wedding. Yeah, they did that. And it's part of where things are going, that couples getting married are deciding, you know, we can't afford all this cost with a wedding. And although that's really kind of a nervy thing, well, it is nervy, to invite people to share your day of joy with you, but charge them to attend, I mean, man, that's way out there. But people deciding that they're going to do much more affordable events is absolutely happening now. Wedding planners complain that people are having much smaller weddings now. Far fewer people are being invited. Much more intimate weddings. And something I talked about before is people are now just having a reception with guests, which, by the way, Lane and I must have been way ahead of the curve. Do you remember that Lane and I did that?
Mm-hmm. I wasn't there. I wasn't invited. I guess because I didn't know you yet.
But well, that would be a problem.
Yeah,
because we didn't know each other till 2 years later. Anyway, so when Lane and I got married, we had a tiny family-only wedding to reduce costs. And then we had a party afterwards that we did not call a wedding reception because then you pay more for everything else. And we basically shrunk the cost to a tiny amount. We had our reception at my late mom's condominium building and had to pay $25 for the party room. And we did the whole thing so dirt cheap, which obviously you'd expect from me. But I think I was an embarrassment to my in-laws, or my new in-laws, at how thrifty we were.
Well,
with
the
everything.
getaway car.
Well, that was at the wedding itself that I ruined the photography because it was like a $14 a day rental car, which today in today's dollars would be like $25
And it was
a day.
purple.
It was purple. It was a purple Mitsubishi subcompact. Let's just put it out there. And that's what we left the wedding in. But you know who was the angriest about it was the wedding photographer. He said, my whole career, I've never had to photograph a getaway car that looked like this.
I mean, it's perfect for you. It's great.
It was perfect
Yeah.
for me. And that at the reception, everybody was served Costco pizza. No, they weren't.
No.
They weren't. But people are, I mean, you know, it's funny. You're out of style long enough, you become in style. Mm-hmm. That's what's happening now is people are thinking more and more. I mean, you've always got the people who really splurge or from very wealthy families or whatever who spend a ton on weddings. But the typical bride and groom or groom and groom or bride and bride, whatever they are now thinking differently. And they are having much more basic, more affordable weddings, doing things that reduce that budget. And you think about, let's say, with today's high housing costs, a couple's trying to buy a home or a condo or a townhouse or whatever. I mean, they need every penny.
Yeah.
If they go spend who knows how many tens of thousands of dollars on a wedding, that money could go towards the down payment they need to buy the place they want to live or for whatever it is they're trying to do in their lives. That one day you can have a beautiful wedding and not make it expensive. So I know it's not wedding season.
Well, people are starting to think about it. I mean, that's the thing.
Taking the words right out of my mouth, Christa.
Sorry.
Because
the Clark Howard show.
Historically, we always talked about weddings. You know, we'd say, oh, well, we should talk about weddings. You know, it's June or May or whatever. And then we thought, you know, why don't we talk about for people planning weddings now and getting into, there's no groomzilla mode, but they call it.
Oh, you never know.
Groomzilla?
I'm sure there are.
Anyway, getting in this mode of thinking differently about it, that you have a budget, you stick to it, and make that budget realistic in your life, and make it a budget that you don't have to go into debt to do. And control those expenses. If you're getting married next spring, summer, fall, you're probably in the planning phase now, because people plan way ahead, except for me. Anyway, and so think about it with a fixed amount. What really is realistic for your life? And instead of adding to it with cost overruns, cut things out. And all that matters is that the two of you look in each other's eyes and exchange your vows and then have a wonderful life together. That's what matters. All the rest of it, no.
So true. And by the way, the couple that sold tickets to their wedding, they were $333 each.
Are they still married?
I think it just happens. Hopefully.
Yeah, I know. Are they still married?
Okay.
You know this is not a joke. The longevity of a marriage apparently is inversely proportional to the amount of money spent on the wedding. The higher the budget for the wedding, the shorter the length of the marriage on average.
Maybe psychologically because people are just looking to have a wedding And so they're spending more money on it. They're not thinking as much about the long-term marriage. They're thinking, I want this big wedding. I want my Pinterest wedding. And so they're spending all this money on it.
You're kidding, aren't you?
No, I'm serious.
Really?
That's what it is. Yeah, I'm sure if it's inversely proportionate, that makes sense. Like
people want the coronation, but not the happily
maybe
ever
they
after.
think they do, but maybe if they're spending more, it's very possible that it's more important to them that the party is huge. Don't you think? Just basic psychology. I mean, I don't know. All right.
Okay, I knew the world had changed when a young woman said to me, she said she wasn't married yet. She said, but what she said was, she said, all my friends have gotten married. And she said, I'm not even divorced yet. And I'm trying to remember exactly how she said it. But my goodness, I mean, that the wedding, as you said, is like this big festivity unrelated to what's going to happen.
Sometimes, yeah. Okay. Stephen in Pennsylvania says, I recently leased the most basic of all Toyota Corollas, and unfortunately I now find myself slipping into the $400 a month payment bracket. I stated to the salesperson that it wasn't long ago that my lease payment was in the 200s, and his reply was that those days are long gone and they're never coming back. Is he right?
So on new vehicles, maybe, but the whole premise, Stephen, you asked me about and how you stated the question is what I want to have a conversation with you about. Toyota Corolla. People who buy Toyota Corollas buy them for one simple reason. They want basic, reliable transportation. They want something they can get on the road and they can drive month after month, year after year. They're in that Corolla. And that's what Toyota is known for. And so to lease a Corolla means you're getting in one you're only going to keep for 2-3 years. You're cycling out of it, going into a new lease. The real problem with 200 becoming 300, becoming 400, next lease maybe 450, whatever, is you're just throwing money away on a vehicle that really is much better owned long term. And let me tell you, these Corollas that you cycle out of, that next owner loves you. Loves you. They should send you a gift every year on your birthday because they're cleaning up on the lease that you did. So I hope that what you'll do is you'll make this lease your last lease. And if the terms in the lease are good for you buying the vehicle at the end of the lease, the residual in it is below fair market value on the vehicle, buy the vehicle and know that Corolla is good for you to drive 10, 15 years, you'll be just fine down the road.
Johanna in South Carolina says, I have 3 children who completed orthodontic treatment to the tune of $6,800 each, and 2 more children waiting in line to have it. Upon completion of treatment, they were each given a dinky pair of plastic retainers. Sure enough, one lost his, another's broke in half, and the others had holes wear through it. The orthodontist offered options of either buying replacement retainers for $500 per set per child or $1,000 each child for retainers for life, up to 3 sets a year until the orthodontist retires. I did not budget for this extra cost and looked into starting completely over with an online orthodontic company. I would appreciate any advice you may be able to offer on this topic.
So if the kids are out of braces and they're on to retainers, I don't know how many of these online sellers, of which there are probably 10 or 12 out there that have some market share.
She mentioned Small Direct, but they're out of
gone.
business.
They went bankrupt, didn't they? Mm-hmm. Yeah. How many of these will provide positioning for children? They're really geared towards adults. But if some of them do pediatric, I mean, that is a potential option for you. Dentists are going crazy right now that I'm even saying that, but you asked the question. If the alternative with kids and knowing how flaky kids are, having had 3 myself. I would do the 1,000 and have 3 sets a year for as long as your dentist keeps working.
How old's the dentist, though?
Huh?
I'd want to know how old the dentist was.
Yeah. My dentist just retired.
The orthodontist, actually, this is an orthodontist.
Yeah, but I went to my dentist for decades. She was so wonderful. Anyway, if the dentist seems to have a lot of career runway in front of him, definitely the $1,000. And gosh, 5 kids, all have teeth that need straightening. What happened here?
Oof.
That is a lot of money. You're talking about, for 5 kids over the years, $35,000 base, and then you got the retainers on top of it. Whoa.
All right, Scott in Georgia says, based on Clark's advice, I've decided to move an old rollover IRA from a high-cost provider to one of your favorite children, Vanguard. The Vanguard process requires me to get a check from my old provider and then mail it to them. This seems really risky to have that much money on a check in the mail. Is there a better way to do this with less risk?
So 401k plans have, many of them now have online ability to roll over from one provider to another. Not common with IRAs. I know it's so antiquated, but it is common that the old provider provides you a check. You have 59 days from the date on that check to have it officially on record with, in this case, your new provider, Vanguard. And what I like for you to do when you're sending, these are typically larger checks, I want you to send them to the address at Vanguard that's a physical address that you can send items going UPS or FedEx. You do ground with UPS or FedEx with the check. You've got tracking and tracing all the way, and you'll know exactly when it's received. If it gets lost at some point and Vanguard says, oh, it was lost in the mail, you can say, no, 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 no. Here's my proof. It was signed at your mailroom on such and such a date. That is invaluable. On TV, we dealt with something recently with a rollover check that was stolen in the mail, washed, and a new payee put in, and it's been a disaster for the individual involved. That's why you use FedEx or UPS. If you sign up with Pirate Ship, you can send it very, very cheaply. Pirate Ship's phenomenal, by the way. If you've never used it, it will save you so much money on sending packages, sending an overnight envelope, that kind of thing, or a multi-day ground envelope kind of thing. Pirateship.com. Sign up for it, set up an account, print out your label, and then send it. They're going to be, I think they're going to be UPS, not FedEx. But it'll be really cheap for you to send that check in a way that you don't have to worry about. So, by the way, Christa was mentioning Clark Stinks earlier. Tomorrow, Friday, is Clark Stinks Day, my favorite podcast of the week, where you get to share with me how I can serve you better, things where I just didn't see a wider picture, or you think I'm just plain wrong. I love it. It helps me so much in what I do to serve you. I hope you'll join us on tomorrow, Friday's podcast, for Clark Stinks. And I appreciate so much you having faith and trust in me and what we do at Clark.com, at ClarkDeals.com, what we do here on the podcast, what we do on the YouTube show. And so just know what we're all about, you learning ways to save more, spend less, and avoid getting ripped off. Have a great rest of your day.